Good afternoon. It's Jeff Christian from CPM Group. It's about 2 o'clock on Friday, the 30th of July. It's the last day of July. Got a few topics I want to cover. Our market outlook for August, September, and beyond. Comex silver deliveries, point out a couple of things that are of note in terms of what they all mean. I want to talk a little bit about the dollar and the fact that the dollar is not collapsing. And specifically, I guess there are two basic reasons for this. One is the dollar is not collapsing, and you shouldn't be worried about it. The second thing is that people are trying to drive investors into gold by telling them that the dollar is collapsing and the financial system is crumbling. And they're just trying to be fear mongers. And then I'll finish up talking about a misstatement that I made 10 years ago in a debate in 2011, and a couple observations about it. So that's what I'm planning to talk about. Gold and silver, we've talked about this in recent videos, we've written about it in recent reports. Gold and silver have been kind of moving sideways since the beginning of June, the middle of June. And we saw the prices. Those of you who have been watching these or listening to our trade recommendations, you know that on the 15th of July, our gold trade recommendation was that in the final couple days of July, you could see gold prices move as high as 1840, primarily due to the role of the August Comex gold futures contract into December and to a lesser extent October. We thought that the FOMC meeting this week would have some effect along with other economic conditions. Gold prices were basically trapped between, say, 1795 and 1805 for much of late June and July. They did rise. They broke above that. They got to 1837 yesterday, and they're back off below 1820 now. Silver prices similarly have been very much range bound, probably even weaker than gold, unable to break above 2650, much less 27. We had thought that the prices would be a little bit stronger, but they haven't been. They did rise yesterday and they're back off about 22 cents today. Our expectation is that the prices of gold and silver are vulnerable to lower levels over the course of August, probably into September. Gold could go down to 1800 and then 1790 and then 1780. There is a real possibility that you could see a sharper move down in gold as low as 1680. We saw that in March and we saw that at the beginning of April, and it's possible that we could see it again. Similarly with silver, we've been saying that we thought it could fall to $24. In reality, a drop as low as $22 cannot be ruled out. We're seeing stale bull liquidation, which we've talked about. We're seeing newer investors who came into the market partly because they saw gold and silver prices rise in July of 2020, and they thought that those increases would continue, and they haven't. And you've got a fair amount of new investors to gold and silver who are relatively disenchanted. And meanwhile, they're looking at rallies in bond prices, and they're looking at stock markets moving to higher prices, higher record levels. And they're saying, you know, I think I'm getting out of gold and silver. So we're seeing pretty weak demand for gold and silver really around the world from investors. And you're also moving into a period of seasonal declines in the jewelry industry and electronics industry as they take vacations and they take inventories in July and August. So the markets are really vulnerable. And you can see from these charts here, which I used last week, you know, you saw the big increase last July to record levels in gold. And then the price just hasn't maintained that. It's come down sharply to that 1680 in March and April, came back up to about 1900, tested 1900, couldn't stay there, and has come back down to around 1780, 1820. And as I said, we think it's vulnerable now to spike lower. Silver prices similarly rose very sharply last July, came back down There was a little spike up 1 or 2 days during the let's squeeze the silver market move in January, February, March, whenever that was. But the price really couldn't maintain that level, and it came back down. It's basically traded below $28 ever since last summer, and it also is vulnerable. Beyond August, we wouldn't be surprised to see the prices move modestly higher and move modestly higher in 2021. Longer term, we still are concerned about the next recession and the next financial crisis, but we think those might not really become prominent and emerge as a major form of immediately stimulative demand for gold and silver until 2023 or 2024. The reality is that the factors that could trigger the next global financial crisis and the next recession can emerge at any given time. There's a tremendous amount of uncertainty, which is why we've been telling people take the opportunity of weaker prices to load up on gold and silver, because if you wait until that time, you'll be like the guy who bought gold and silver at $1,900, $2,000 last September and is now selling it at $1,820. This is a chart of monthly Comex contract deliveries on silver. And notice I said contract deliveries, because when you take delivery or deliver on Comex futures contract, you are delivering a contract. That contract is backed by 5,000 ounces of silver, but it's the contract that you're delivering. So there's no 5,000 ounce bar delivered to your door. You have a warehouse receipt. You can go to the warehouse and say, I have that 5,000 ounce bar. Here's my warehouse receipt, my depository receipt. Give me that 5,000. Six, I think I've lost some video audio, so I'm going to repeat it. Let's put this into perspective. From 1988 to 1996, you had typical deliveries in active delivery months that were 2-3 times as large as they are these days. And when you look at the history of the silver market, that was a period of massive disgorgement of physical silver by investors. Investors who had bought a lot of silver 1979, 1980, and then in the early half of the 1980s, in the expectation, hey, prices have risen from $5 to $50, they're going to go to 100. Various very smart people have been telling me repeatedly, silver's going to 100 back in the 1980s. So I bought a lot of silver. And now the price is $8 and $7 and then $5 and then $3.50 an ounce. So please take my silver. My wife has been telling me what a schmuck I am for buying this stuff. So you had this massive amount, I think it was close to 2 billion ounces, all said and done. It was clearly more than 1 billion ounces of silver that was disgorged by investors from the selling started in the late 1980s. It was net selling after 1990 into 2005. And that weakness, $3.50 to $5.50 silver, massive selling by investors, that is what corresponded with and was reflected in the big deliveries on the Comex. So the idea of large deliveries on Comex is not a bullish factor per se. It's an indication of something happening in the silver market, but back in the 80s and 90s, it was not something that was particularly price positive. I want to talk a little bit about the dollar. This is an advertisement from one of the most prominent gold promoters to investors on the internet. This one came out Saturday, I think, July 24th. And as part of my awakening to that part of the precious metals markets that I've previously been protected from, I saw this. The dollar is already in free fall. Now, I studied journalism in university, and one of the units that you had in basic journalism was propaganda. And one of the things that you learned was things that propagandists do to make points. Sometimes they take a weather map and they take a magic marker and say, hey, look, this hurricane hit Alabama. Other times they take a chart and they take the scale off. So you see this enormous decline in the dollar. And then you look at the bottom, this is from March into August, which is interesting because we're not even in August, but they have it on their chart. But this massive decline, but no scale, no perspective as to how steep this free fall is. Let me show you. This circle incorporates that free fall and then some. The dollar is not in free fall. It is higher by a wide margin than it was from 2003 through 2014. It has come down from its peak in 2020, but that's not a free fall. Now, I saw one of these guys, perma bulls of gold. I've been telling you for 10, 15 years, ever since I started promoting gold and silver, that the financial system is crumbling. And now I think the crumbling is actually entering its final stages. Financial system is going to crumble. The dollar is going to collapse. Bells will ring in churches around the world, and gold is going to $2,000 or $20,000, and silver is going to $1,500. The financial system is not crumbling. The financial system has a lot of problems, and there are a lot of people who are working very hard to fix that. And some of them have good ideas, and some of them are not so competent. But almost all of them are more informed on how the financial system works than these guys on the internet who constantly tell you year in, year out, decade in, decade out, the financial system's crumbling, the dollar's going to collapse, the treasury market's going to collapse, gold's going to $10,000 or $20,000. You will be able to buy a house with 10 ounces of silver, probably next month. These guys have been wrong over and over and over again, and people still listen to them. I just don't get it. I'll leave that one up while I talk about misstatements. Someone made a lot of hay in some corners of the internet this week because they went and found 10 years ago when I was debating GATA that I had said that Blanchard and Barrick and JP Morgan were all my clients. The context of that, Blanchard, which had been a very good client of ours, had decided that there was a grand conspiracy to drive gold prices down. And we were actually helping them in their days, trying to understand why they were wrong. Don Doyle, who was running Blanchard at the time, and I think he still is running it at the time, said, clearly CPM Group is part of the conspiracy because you're telling me that I don't know what I'm talking about. And he sued JP Morgan and Barrick. He lost that suit. And in his losing the suit and paying penalties and all, he had to issue an apology to Barrick and its executives for all of the slanderous things that he had said. Now, in my discussion with GATA, there was a debate. GATA initially sent a flyer around in 2009 saying, hey, we're going to challenge Jeff Christian to a debate. Please send us money to help us prepare for it. They never actually challenged me to that debate, but they had 6 points that they said were irrefutable evidence of a grand conspiracy to suppress gold prices. I said, bring it on. Bloomberg TV said, we'll televise it. GATA never came forward. In 2015, they were working with somebody who was starting a closed-end silver fund who wanted to promote the idea that there was no silver and gold at Scotiabank or Delaware Depository or other major legitimate entities. So you should take all of your money and give it to this guy to run it. And Gata was working with that guy and telling people, yeah, there's no gold and silver in these various legitimate depositories. So a few people came to them and said, hey, let's do this debate. And they put together an audio debate on Financial Sense. And we started, Jim Puplava, who ran Financial Sense and is still involved with it, was the moderator. He said, Gata, you have 6 points. We're going to use your 6 points for at least the first 6 points of this debate. And we did a debate in April, May of 2010. Somebody said Jeff Christian wiped the floor with the Gata representative. Yeah, I don't know. I don't care. But it did its point. We repeated that debate in 2011 at what was then the Silver Summit. Kit Covell broadcasted it. We had Andrew Bell from BNN, Business News Network, moderate it. And the subject of the Blanchard lawsuit came up. And I said, I misspoke. I said that Blanchard and Barrick and JP Morgan were our clients. So somebody picked that up and said, hey, Jeff Christian has repeatedly said that JP Morgan has never been a client of his, but there he is, he said it. What I meant was that Barrick actually was a very good client of ours from the days that they began, 1983, up until just a couple of years ago. Blanchard was a very good client until they decided we were part of the problem. A little paranoid schizophrenia going on there, I think. And JP Morgan actually was not a client. But we did work with JP Morgan as a counterparty. We were advisors to counterparties, institutional investors, high net worth individual investors, Barrick, other mining companies around the world, refiners, and others. We worked as advisors to counterparts to JP Morgan. So we worked with them, but we didn't work for them. Now, our accountant, when he saw this guy say, oh my God, Jeff Christian lied, I can't make that shape in public, went into our records and said, you know what, from 2014 to 2017, after 2011 actually, from 2014 to 2017, JP Morgan bought a gold yearbook and a silver yearbook each year. That's $1,280 worth of yearbooks. Putting that in context, it's 1.1% of the $112,880 that First Majestic paid us for research and consulting services between 2006 and 2013. And it's a fraction of the $500 a month that someone who is now anonymous has been paying certain groups to promote the idea that you can squeeze silver and drive the price to $100. So it's not particularly big. I made a mistake. I misspoke. I didn't lie. Now, if you want to talk about lying, I think what you'll find is that CPM Group and Jeff Christian are probably the most consistently honest people that you will hear talking about precious metals. And if you want to talk about lying, go back and actually watch that 2011 debate and listen to the substance. Listen to us tear apart and completely discredit everything that Gata was saying before that and continues to say. Then go back and look at those guys who are saying, hey, the dollar is collapsing. It's in a free fall. There's one guy who will remain nameless because I'm supposed to be a gentleman. His boss has pleaded with me not to talk to him about him in public, who just yesterday was saying, yes, it's quite clear that after 10 years of being wrong, I am right and the financial system finally is crumbling. And he said it with a lot of glee. It's quite clear that it is finally happening after all these years of being dead wrong. And I would say knowingly dead. Because no one can be consistently wrong that long and not stop and say, oh my goodness, I'm wrong. And I do know people who have been wrong in their fundamental analysis of gold and silver since the early 1990s. And in the last part of the last decade, some of them said, you know, we realize that for 25 years we've been wrong on the way we portray gold and silver markets, but we really can't admit that in public now. When I make a mistake, I admit it. When we have bad data and we find it out, we correct it. That's what analysts do. That's all I got. We will be coming up with an open forum August 25th. It'll be an interesting one because I'll be coming back from vacation the day before that. Our gold, silver, and platinum yearbooks are available online. $160, even JP Morgan can afford them. And it's funny because it's the same price that it was back in 2014 when they bought them. The retail investor programs are available, as are a bunch of other types of services that CPM Group provides. Have a good weekend. Be good to yourself. Take a time to breathe and smell the flowers. Be careful, be clean, and be good to other people. I'll talk to you next week.